Good evening, everybody. Oops, I guess we got another few seconds before we get started. And Michael, as you may know, does a lot of extensive trading in our options room. And the reason we're pleased to have him with us is he's about as clear and thorough a teacher as you're going to come across. He makes difficult concepts very simple to understand. So tonight he's going to go through one of the indicators that a lot of people are interested in, or a lot of people express interest in, which is the Bollinger Bands. So with that, Michael, I'll let you take it away tonight.
Thanks, Stephen. Great to be here and glad to see so many people are here. And yeah, the purpose of tonight's approximately half-hour presentation is to just show you how I plan to present and explain a particular indicator. In the full course, of course, we have 8 hours of that, but this is just a half-hour sample of what this is going to be like. And this next screen just gives a little bit of information about who I am and what I do. And I've written a lot of books about options and a few about candlesticks, along with Steve, who's also written extensively about candlesticks, and his books are available on his website, and I recommend anyone who doesn't have them should definitely get them. And so tonight we're going to talk a little bit about, as Stephen said, one indicator, which is the Bollinger Bands. One of the key ideas about the way that I like to do things is keeping it very simple. As I say here, technical analysis doesn't have to get too technical. It's just nice and simple is the way to do it, in my opinion. So the technical edge, which is what we've named the full course, is a process of taking something that's relatively complex overall and making it very simple. And that's the whole point of doing this. So I call this a probability matrix. And that's because it helps you in many ways. And there are many things that come out of this indicator, which is called Bollinger Bands. And it helps you to see reversal signals very clearly, oftentimes more clearly than you would just in a dynamic bullish or bearish movement. So a lot of times sideways moving trends are best for identifying breakouts and resumption of something after a sideways plateau, so that if you had a bull trend and then you have a sideways trend, Bollinger Bands helps you to see when the trend is resuming or going in the opposite direction. And a lot of this, of course, is based on candlestick signals and recognizing them, and helps you to develop a nice, thorough trading system. So this indicator helps you to identify entry and exit and timing of when to make those decisions based on how price behaves within the range of what is essentially 3 bands. The middle band of Bollinger is a simple moving average, and the upper lower bands are the same. They're simple moving averages, but they're removed from the middle band by 2 standard deviations. And the strength of this is what makes it such a valuable indicator. It creates what I call a probability matrix, is actually a dynamic trading range between resistance and support. But rather than being the straight lines we often associate with those, Bollinger creates a dynamic version of resistance and support. So the first indicator that is probably one of the strongest that you're going to see within especially a sideways move is called the Bollinger Squeeze. This occurs when the breadth of trading on a daily basis becomes more and more narrow, and especially as the price moves to the edges of either the upper band or lower band. And what you expect to see after you see a Bollinger Squeeze is a widening of the bands, meaning greater volatility, and that often leads to a price breakout. So here's a chart that shows you an example of what this looks like. This is a chart of Gannett Company, and you can see the middle band is the dotted line, the upper and lower band are quite visible, and there's a consolidation that started in March and went through most of April. That's generally speaking between about 1475 and 1575, a pretty narrow range. And Bollinger squeeze occurs in that area that's circled. You can see that relative to what happened before, the range got very narrow. And so when you see that, you expect to see a breakout, and as expected, it did break out. So that's what the Bollinger squeeze looks like. The next indicator is called the M top, and this occurs when the trading does a seesaw pattern that forms the letter M, and it's a bearish signal that's very similar to a head and shoulders or a double top, except that it usually is expanded over a longer period of time, more like a head and shoulders. And one of the key segments, one of the key attributes of this is that the final leg of the M should break below support. This signals a successful breakout from that Bollinger range. Now here's an example. You can see here in March that there's an M top has formed, and as it comes to the last leg of the M, the price ends below the lower band and actually stays down there for 5 sessions, which is a very strong indication of what happened. And so when you see this M forming, that first band that goes below would be the signal that tells you that with confirmation in the form of the M and hopefully with some other signals, in this case a couple of strong gaps, that this has further to go. So sure enough, this goes down another 6 points below that. So that's what an M top looks like. The opposite of that is the W bottom, which is bullish. And like the M top, this is a very similar type of signal to the double bottom, except that the double bottom tends to be consecutive sessions and the W forms over a much longer period of time. For example, here's U.S. Steel, symbol X, and several things happen here that are very interesting. One thing is, of course, the W bottom is prominently seen here beginning in February and going into March. As the W comes to an M, you see the trading move above the upper band and actually forms the 3 white soldiers. And even though this does not appear at the end of a downtrend like you normally would expect to see, it does appear at the end of consolidation. And in that regard, when you have consolidation like you have here in January and February between about 650 and 8, somewhere along that range, that trend coming to an end is signaled by the W bottom and confirmed by the 3 white soldiers trading above the band. Those two things together are very strong signals, the 3 white soldiers and trading above the upper band of Bollinger. And there are volume spikes at the same time. And I didn't highlight it on this chart, but there also is movement of momentum measured by relative strength index above the overbought line. I didn't highlight it because this partly reflects the averaging of the price moving very strongly. So I'm not sure that this actually means that the price was overbought at this time. But you have plenty here. You have the W bottom, the 3 white soldiers trading above the upper band, and the volume spikes. That's a lot of stuff in one place. So this is a good study of a chart that shows you how Bollinger Bands helps to form these reversal signals, especially signals coming out of consolidation. The next one is a signal that I've been paying a lot of attention to lately because this is extremely strong. It's an island cluster, and it consists of a small grouping of trades that is either above or below the current trading level and is marked with a gap on either side. That's the island. And it tends to be an extremely strong reversal signal because once it returns back into range, it tends to keep moving in that same direction. So here's a chart of a company that had a few island clusters. First one, you can see the gap before and after was 5 sessions. And actually, it remained within the Bollinger range. So that's as strong as that is. It's not as strong as you'd like to see it because you prefer to see these things either at the at the upper or lower bands, or preferably going outside of the lower bands. The second one, another island cluster, is only 2 sessions with gaps on both sides, and this does actually get down to very close to the lower band. And just like the first one, you expect to see the reversal. And sure enough, it reverses back up close to the upper band. The third one actually does trade above the upper bands. So again, 2 sessions, gaps before and after, and then the price does move back down as expected. Now, obviously, this example shows some very short-term trades and the expected reversal happening within a limited range of points. But it's very useful if you are swing trading in a situation like this and relying on Bollinger Bands to help you to identify when you want to time trades on the way in and on the way out. So island clusters are very strong signals that that the price is about to move in the opposite direction. And it doesn't always, because nothing always happens, but it often does do exactly that. Now, another session or another signal that's pretty basic but very strong is when you have trading outside of the upper or lower bands, because the reason that Bollinger is so strong is that those bands are 2 standard deviations from the center. So normally you would expect to see trading reside within the bands, and when it goes outside of the bands, that's a strong signal of something new happening, and usually reversal. Now in this case, Raytheon, you have here 4 or 5 sessions in November that move strongly above the upper band, and as expected, immediately retreats back all the way down to the middle band. So this moves from about 126.5 down to about 121. Not necessarily much of a move, but when you see this happen, when you see the trading above the upper bands, you do expect to see the price adjust and move back down into the bands. An even stronger indication was seen in January when you had almost the entire month trading below the lower band. This is very unusual. And even though the Bollinger itself represents a summary of the averages of price movement, you don't expect to see trading below the lower bands for this long. In this case, the trading did reverse and move back up from about 118 all the way to 127. That's 9 points in about 2 weeks. So these are the sort of signals that when you see them, when you have Bollinger up, you recognize these out of the bands trades, and you don't see this unless you have Bollinger up there. So that's what makes it so valuable, is that you recognize something like that happening. Now another thing that Bollinger does that's very useful is it tends to track resistance and support. Starting with resistance, when the price is moving up, the Bollinger Band's upper band tends to track resistance extremely close. And this raises a question of whether the traditional straight line resistance and support are as valuable as they are in a dynamic movement like this, because the truth is that oftentimes we do see resistance and support moving in ways other than a straight line. And Gary is asking a question. I'm going to interrupt myself for a minute here to say, did you take any of these trades? Alan also says, by the time the signal is confirmed, profitable trade is already over. That's not always true, Gary. Alan, I think that it depends on where you see the signal and whether you act quickly enough. For example, when you're going outside of the upper or lower bands, that's a signal of coming reversal. And once you see that, let's say 3 or 4 sessions in a row, that's a good time to make a trade. It's a reversal signal. And of course, if it's confirmed with candlesticks or volume spikes or momentum, then that's even stronger. But I think that the idea that by the time you see confirmation, the trade's already over, I think that you can find, I'm going to go back for a second here and look at the previous chart, because this raises a good question. In this case, what you'd look for as far as confirmation is, for example, you see here you have a long white candle. That's the first indicator that goes above the upper band and closes. Then it closes up there again for the second and third signal. At that point, I would say that would get my attention. And then when you have these continuing gaps, I think the real confirmation signal are these last 2 days, which forms a double top. And if you notice this, the last two sessions that are outside of the bands form a very strong double top. And so that confirms what you expect to happen, but it's not too late to make that trade. By the time that second part of the double top forms, that would be the time to act. And if you did, you would do okay. Now on the way down, you have, just like you had a long white candle here, you have a long black on the other side. And you do have some indication of what's happening in the sense of this trading below that band for so long. And again, I would look for things like the double bottom, which this is a tough one to read, honestly, because there are so many spikes down at the bottom here. But I think that these two black sessions around January 24th and 25th are interesting because they're relatively narrow. They both have spikes on both sides, and that seems to be a stopping point for the move. It has come up a bit from the lowest it went, but this looks to me like a turning point. And the other thing that makes it a turning point is that for the first time in about 3 weeks, the trading returned back into range. So this would tell me at this point that this is time to move this back up. Gary asked, did you take any of these trades? No, Gary, I have not taken any of these trades. These are backward-looking trades for the purpose of showing how a technical indicator looks. And I think that the question that was asked a couple of minutes ago that was a great question was whether you can see these in time to act. And I'm trying to make the point that yes, you can, especially with Bollinger Bands. But I did not take any of the trades on any of the charts that are here today. Mel asked, do you run scans using the percentage band width to alert you as bands begin to narrow? I do track stocks, especially stocks that I'm holding, to see the expansion and contraction of the Bollinger bandwidth, because, as you're pointing out, that is in fact a very, very good reflection of what's happening in volatility. Looking on this chart, for example, beginning of 2016, the volatility was about 5 points, about 122 to 127. By February 18th, it was actually about 16 or 17 points. By beginning of April, it had shrunk back down to about 4 points. So if you're going to time trades based on how volatility is moving or expanding or contracting, Bollinger Bands is a great signal for that. E. Mehta asks, how do you scan to find stocks to trade? Well, you know, I think that one way you can do this is by starting out by stocks that you're tracking anyway, that you might want to have in your portfolio or at least want to trade. And then I like to do a lot of trading around earnings reports, either before or after, because that's where a lot of action happens. And when you see earnings surprises and big gaps, that's often a good key to enter a trade to take advantage of the swing that you expect to see. And this again is where Bollinger comes in handy. And Mike R. points out that 20/20 hindsight is easy. You're absolutely right. The purpose here is not to say that we could have, should have, and would have done these trades if we'd seen them at the time, but to demonstrate how you can spot these kinds of trades based on what the signals show you, and then make the trade when the time comes up. And I think that the people who use Bollinger Bands to make their trades, or to time trades, or to look for opportunities, tend to become true believers in it, because it does tend to give you the warnings that, when confirmed, can lead to some good well-timed trades and some good trades you would make on that. Tom asks, what's the smallest time frame would you use Bollinger Bands on? Well, of course, I have all these charts set up for 6 months, and these are daily trading charts. But you can adjust this to whatever you want to use. But I think that it's useful to have the longer time span so you can see the longer term trend. William asks, is the 20 line an EMA or SMA. These are all simple moving averages for Bollinger. That's the default anyway. The 14-day is the middle line. 14-day simple moving average is the dotted line, and then the upper and lower bands are 2 standard deviations, but the same premise, but removed by 2 standard deviations. Mike says November 17 looked like a double top. Yeah, it sure did. And there again, this is, I thought I talked about that, didn't I? Didn't I highlight that a little while ago? That, in other words, that you have the double top, and that those also, again, hindsight, I admit, looks like the timing for the end of that out of the band trading, and that would have been good timing if you spotted that. Now, Mike also says that January 10 to 13 looks like a double bottom. I'm not seeing the January 10 to 13 double bottom, Mike. Yeah, I'm just not seeing that. But are you sure you're not looking at the 20th and 21st, something like that? I don't see a double bottom on the 10th. And actually, this didn't bottom out until about the 20th of January. But Bob asks, what simple MA do you use for the middle line? The default on this is 14 sessions. Steve asked another good question. Can you contrast Bollinger Bands with Keltner channels? They often are very similar, but I think that one of the things I really like about Bollinger Bands is that it's very easy to perceive exactly what it is that it's doing. Keltner tends to be a little more complex, which being complex, but I like Bollinger Bands personally because of its long-term reliability. Keltner at times doesn't always do that. Gary says the middle line is 20 MA. Well, I think the default is 14. I'm not positive about that, but I wouldn't say you're wrong, Gary. Gary says, I guess I was wrong. Not necessarily. I think that, first of all, one thing I like about these online charts is you can adjust them to anything you want. But what it says on here specifically, oh, you know what? Excuse me, you're right. I was looking at the wrong place. I was looking at the RSI shows 14, and I was in the wrong place. Up here on the top, it does give you the specs. Bollinger Bands is 20. You're absolutely right, Gary. 20 is the default. Too many signals on here, I think. Michael asks, are the signals always for long trades? No, not at all. In fact, the beautiful thing about options, especially if you're going to base options trades on what you find in Bollinger plus candlestick and volume and other things, is that in any particular place you can do long or short trades. For example, at the top here where you have the double top, if you expect the price to come down, you could buy a long put or you could sell a call. The same thing here at the bottom. You can buy a long call or sell a short put. And so you could do long or short trades depending on how you perceive these to work. Lewis asked, do you buy on the bottom band and sell on top? That would be a strategy if you are using calls or if you're doing shares of stock, for example. But again, if you are going to use options based on multiple confirmation, you can use calls and puts, and you can then do either long or short on either side of the swing. He also asked, do you take into account the direction of the slope of the 20 simple moving average? Well, yes, of course, and I think that this is one of the key elements of trends and trend reversals. Is that I think that the stronger the slope of the trend, the stronger the reversal tends to be. So when you see a rather benign trend, like you see in February and March, there's hardly any movement in that middle band. That's not very exciting. But when you see what happened from November into mid-December, or even from the month of April, you see a lot more of a slope of movement, and that's where you see a lot more action. Stanton asks if I use the default. Yes, I do tend to use the default. And again, I apologize for giving you the wrong info before. Bollinger is 20. And on the chart setups, I do tend to use the default. November 10th. Okay, Gary is saying November 10th has a double bottom. Yeah, you know, I guess you could call it that, more like the 8th and the 9th, I think. I tend to think of the double tops and double bottoms forming as shadows rather than as real bodies. That's a matter of interpretation. If you want to rely on one or the other or just real bodies, you can certainly do that. Michael says, how can you determine signals for day trades? Well, there's a big question. There's so many ways you can do that. And again, if you're going to be strictly a day trader, I would revert to charts with the sessions of 20 minutes or 1 hour or something less than the full day chart. These charts I'm showing you are single day charts. ST asks if I would comment on NASDAQ Daily showing a Bollinger Squeeze. I think that whether it's an index such as NASDAQ or a single stock, I think that the same observations apply. Yeah, people are commenting on the default on the middle band. It is 20. That is the default. Now, Linda says hers is 14. If you're using 14, you must have made an adjustment to the default to get that. Yeah, Lewis says the chart shows the default is 20. It does. It's shown right up at the upper left here, and that's absolutely right. Michael asks if I use standard support and resistance. I do quite often, but more and more I'm liking what I see with Bollinger Bands because this tends to give you this dynamic resistance and support. And in fact, that's a good lead into what comes next, by the way, which is this idea of the tracking. Like I say, the upper band tends to track resistance on the way up, and the lower band tends to track it on the way down. So this gives you a something beyond the standard support and resistance. It gives you a dynamic movement. For example, here on AT&T, look at this upper band and look at how the price moves. You can see it's tracking it so closely. And if you do a standard straight line resistance on this, you would lose some of this effect. And you have information, of course, because resistance and support does give you information. But a couple of things in Bollinger that this gives you. Not only does this track very closely what resistance is showing, but for this entire bullish move in February and March, you'll notice that the trading is all taking place between the middle band and upper band. That's very bullish. Now, once you get into April, the price levels out and you have a bit of a consolidation going on, and the price further narrows down so that it's tracking the middle band rather than being above the middle band. So that's one version. The other version of that is that the lower band tends to track support on the way down. So here's an example, Rackspace Hosting, in which you have a declining price in December and January, and you'll see that the lower Bollinger tends to track that very closely. Once it begins to moving sideways, you lose that. But if this were to head back down again later, you would recognize the beginning of the downtrend by the fact that the lower band of Bollinger would be tracking that very closely, which it does very consistently. Bob asks if I use RSI or RSI Wilder. I use RSI very faithfully, Bob, and in fact, what I like about RSI is that, especially in conjunction with Bollinger, if you have a 6-month chart and RSI never moves into overbought or oversold, that itself is a signal that the momentum is not showing anything extraordinary or unusual. And for example, in the case of this particular stock, you saw in January that there was about 2 weeks when RSI was in oversold, but the stock did not come back very strongly. And this tells you that this is a reflection of what was happening in the previous 14 sessions with the stock moving down. That's simply an averaging effect, but you don't really see anything in in the stock price other than a few days of trading below the lower bands to tell you that this is about to move strongly upward, and it doesn't, in fact. So this is one of those things. Looking at all of the indicators together gives you much better intelligence than relying on just one or two. Carol asks, if you change the default, how do you adjust the standard deviations accordingly? Well, the standard deviations are based on the not so much the averaging period as the deviations themselves. So once you have that middle deviation, whether it's 20 days or change it to 14 or change it to whatever you want, the standard deviation is going to be calculated based on each day's moving average result. And if you notice, on every chart that you see Bollinger Bands, the distance between the middle band to each of the other two bands is always exactly the same, and that's because they're both two standard deviations. So the only band that actually has reliance on an average is the middle band, and the other two bands are not based on a period of moving average, but are based on a standard deviation of the averaging over that period of time. So that's how that's calculated. Gary asks if you'd get better results if you tighten the bands. So, for example, if you use one standard deviation, you'd probably get more signaling, but I'm not sure if that wouldn't involve some false signaling as well. Lewis asks, are Bollinger Bands good for any time frame, such as 15 minutes or hourly? And absolutely. One of the things about technical signals is that they tend to all work on all different types of time frames. Terry asked, do you really need the middle band? You do, in the sense that, as we pointed out with the AT&T chart, when you see trading occurring for an extended period of time between middle band and lower band, or middle band and upper band, that tells you something about the strength of the trend. So the middle band is sort of the core of the strategy itself, and the upper and lower set up that probability matrix of those two standard deviations. Randy asks, does double top and bottom signal reversal? Yes, they do, very much so, and they go hand in hand with other signals such as Bollinger and, of course, candlesticks, momentum, volume. They all work together, and the double tops and bottoms are among the strongest signals. They're sort of the abbreviated version of the M top and W bottom. Let me continue on here quickly. So the point to be emphasized about the Bollinger Band strategy is this: that it doesn't have to be too complex to do technical analysis. To me, I've always liked the idea of limiting my analysis to a very short list of signals. There are so many possible signals you can use. I currently have it down to this. I first look for candlesticks. If I can find a good, strong candlestick reversal, I then want to look at what is happening with Bollinger and with momentum, relative strength index, with volume, and then with the Western stuff, the double tops and bottoms. What am I seeing collectively with that short list? And that's not the only things I'll use, but that's usually my starting point, that if I can find a reversal with a confirmation with at least two of those indicators, then I feel pretty good about it. Michael asks, how are the bands set for day trading? Well, I think with day trading, you would still, let's say that you're basing this on the default, 20-period default, you'd still have the 20-period default, but if you are doing, let's say, 1-hour charts instead of 1-day charts, you would then have 20 hours instead of 20 days. Stan asked, do you ever use the 3x? I have never used the 3x. I haven't even checked it out, so Stan, you'll have to let me know whether that's a better signal or not. I suspect you'd get less signaling from that rather than more, which maybe that's what you want. So this brings up a question that everybody doing technical analysis should be paying attention to: is the consistency of Bollinger Bands is very attractive, but does that mean that you're going to be successful with the consistency? And I think that the real key of something like Bollinger Bands is that it allows you to spot changes and to spot likely reversals. They don't work by themselves. They have to have a very specific set of different signals you use together. Michael asks, how do you get a reversal signal for 15, 30 minutes or 1 hour or more? Well, again, looking back to Bollinger, you would have 20 15-minute periods in a Bollinger spread, so that instead of 20 days, you'd have 20 15-minute periods. And with 30 minutes, you'd have 20, in other words, 10 hours. And with 1 hour, you would have a collection of the last 20 hours coming up to that average. And for the middle, and then from that point on, you would have the 2 standard deviations. Joe asks if stochastic is part of the charting. I have used those, but honestly, I like RSI better, just because I think it gives off clearer signals and actually less signals. And I see an advantage to having less signals because it gives you less in the way of false signals as well. Nothing wrong with using any or all of these things if that's what you have come to rely on. And of course, the T-line shouldn't be overlooked as something that adds a lot of strength to the averaging you see in Bollinger. So if you want to have a successful trading system, which of course you do, you're going to need to decide on which kind of signals you're going to use. Today's coverage has just been mainly on Bollinger Bands, and as the question has come up, technical analysis and all of the different types of signals apply in every type of trend, whether it's bullish or bearish or consolidation. And the other aspect of that is it also works in all time frames. So whether it's 20 days or 20 times 20 minutes or 15 minutes or 1 hour, these all work the same way. And the second principle is that recognition of powerful signals, especially candlestick reversals, along with other signals, is going to immensely improve your trading ability and your success with timing. And I think that the consistency, and not so much what the signal shows, but in how you apply it, is where you're going to find improved success. And that makes the complex simple. And so I'm going to see if Steve wants to add anything to this. I hope I've answered all of your questions. I know they were coming through pretty fast, and we're under a time constraint, and I'm already gone over. But I want to let Steve take over here and see if he has anything to add. And I'm going to put up the last screen here, which is the gives you the link to the sign up for the 8-week course that's going to start on September 17th. It'll be Saturday mornings. Evinder asks, what is a T-line? That's a simple exponential moving average of 8 days. And I would very strongly suggest that you take a look at it and see how readable that is. The signals it gives off is that if the price closes several days in a row, either above or below the T-line, that gives you an indication of the trend. David asks if I have a current trade example on the market. Well, I don't have the interactive chart in front of me at the moment, but I would say look at the take a look at some of the stocks that have been moving lately, like Tesla is an interesting stock to look at for this. Netflix has a lot of great volatility, and I would say take a look at Bollinger overlaid on Netflix and see if you can spot some island clusters and some trends and some moves above and below the lines, the upper and lower bands, and island clusters. I think you'll find a lot to look at on volatile stocks like that. Thank you, Gary. Okay. Stephen, have you anything you want to add? Michael asks, how consistent is your trading signals? Well, these tend to be very consistent when you use them in conjunction with other signals, because you really do need confirmation, and you're never going to get 100% reliability, but you're certainly going to improve above the averages. RB is asking if I can look at Tesla, and unfortunately, because this is a fixed presentation. I don't have the interactive charts up in front of me right now, and I don't want to go out of this set of charts because I know that the candlestick folks want to put this together and send things out to everybody to help promote the course. Well, thank you, everybody. I appreciate your being here and studying these things. And Trevor has asked a great question. What is the training about? The training will cover a whole range of technical indicators. It's broken down into 8 parts. I will cover the candlesticks, of course, traditional reversal signals, confirmation signals, momentum, volume. I think at the very beginning of the course, I get into some of the basic theories of trends, the Dow theory, some of that stuff. But there are 8 sections. They're about 1 hour apiece. And I think that as people who are interested in candlesticks, I think that you would find the technical edge to be a valuable addition to that because it doesn't get into a lot of the highly technical analytical things that you see so often in webinars or books about technical analysis, but it does introduce a very wide range of the kinds of technical signals that will improve your training. Thomas asks, will the classes show you how to set up iron condor credit spreads? Well, actually, no, they won't, Thomas, because even though I do talk about options a lot in the trading room, this particular course is on the topic of technical analysis, so I won't be getting into specific options trades, but I will be talking a lot about the specific candlesticks that will help, and then from that you'd need to figure out how to apply the option strategies separately. We did have a course on this options called the Options Edge, which was sort of the precursor to this one. This is the technical edge, where I'm not going to talk about options, but I'm going to talk about the many different kinds of technical signals. JapaneseCandlesticks.com talks about Momo bands, which create sell signal on stuff. Momo bands is based on Bollinger Bands. I have not heard of Momo bands, so I have to look that one up. I'm going to make a note to myself to check that out. Momo bands. What does that stand for? Terry's asking a question about current member and whether it's main room or options room. I don't know the answer to that. Becky or Jim or Stephen, can you take that? Mobo. Okay, M-O-B-O. I have never heard of M-O-B-O, but I'm sure the B-O part is Bollinger. I've never heard of Mobo bands, but it sounds like more Bollinger Bands, what it sounds like. Trevor asks if the class is live or pre-recorded. It is live every Saturday morning from starting at 11 Eastern, starting on the 17th of September. But it will be recorded, and at that point, you will be able to get the recording if you miss one of the sessions. Momentum Bollinger. M-O-B-O is Momentum Bollinger. I get to look that one up. I've never heard of it. Terry, yes, the course will be recorded and available for review. And as my understanding is that everyone who attends or everyone who signs up will get the recordings. Michael asks, can we open a live trade on today's training? Well, the problem, of course, here is that these are all intentionally backward-looking charts. As someone pointed out, my hindsight's pretty good on these, but the purpose of this is to recognize signals as they emerge and to hopefully also find recordings, to find confirmation before the price has moved so that you can make timely trades. Now, Jim is apparently knowledgeable about MOBO. He said it was developed by David Elliott of the, I guess, Elliott Waves. But This is a signal I've not seen before, so I'm going to do some research on this. Now, Jim is saying it's momentum breakout, not momentum Bollinger Bands. So I'm going to do some research on this. I appreciate you guys telling me about this because I always want to find out new stuff. The classes, Bob asks when the classes begin. Yes, they begin on Saturday, September 17th at 11 Eastern, and that'll be for 8 weeks. Each week will be 1 hour, and they will all be recorded, and everyone who signs up will get a copy of the recording in addition to hopefully attending the classes. Jim points out that MOBO is not related to Elliott waves, but I can see that the I can see where the expression comes from, what MOBO means. And Jim mentions that by going on stockcharts.cc on his website, http://stockcharts.cc, you can scroll down and find the first wave stuff on MOBO bands. And I certainly will do that myself because I want to research this. Thank you, Jim. And JapaneseCandlesticks.com points out that on TOS you can find the same thing. Okay, everybody. Well, thank you. I hope that that you will copy down this this link on the current slide and at least go take a look at it and see what you think of it. I believe that at this link you're also going to find a list of topics that will be covered each week. This is a question Terry just asked, and yes, I believe that there is a complete outline of all of those things, of all of the topics, week by week. All right, everybody. Great questions. Really appreciate the interaction, and I think this was very useful to the whole room that so many questions were asked, and I hope that I was able to answer adequately. I know there were some that I didn't get to, but I was also aware of the time constraints. And so thank all of you. Thank you very much for attending, and I appreciate it. And I hope I'll see you all at the first week, September 17th. I think it'll be a very interesting 8 weeks.